Hey there, TDG. Let's do what we're watching for the week starting Sunday, November 1st, 2020. So, gang, it is going to be essentially all about the election, of course, this week. Expected volatility. We got COVID in the headlines, of course. There's an FOMC meeting this week, so let's take a quick look at just a couple charts. But essentially, it's all going to be wait and see to the Tuesday night election here in the United States. Right now, the futures markets are down a little bit, modestly, 0.5%. It'd look a little worse if it wasn't for the rally that happened on Friday right into the close. The Dow rallied about 300 points pretty quickly, so it's given some of that back today. So here's the latest. I'm using 538. Biden is expected to win based on the probabilities. I know nothing about polling. I think this is interesting here. Don't count the underdog out. Upset wins are surprising but not impossible. But I believe that a lot of the polling mechanisms have begun to adjust for the uniqueness that is Trump and his base to better reflect the probability of outcomes. So what I thought was kind of cool that I dropped in here, it's in Telegram as well as in the in the Discord channel, is these state potential implications based on the time. This is an Eastern Standard Time as the results come in. So I don't know if this will all be all that tradable, but I didn't have any kind of playbook like this back in 2016. Of course, again, very few people expected the outcome of Brexit or of the U.S. elections in 2016. But anyhow, you got Ohio and North Carolina. You can read this for yourself. So I've dropped it in there. You might want to take a look at that. I think conventional wisdom is that most of us are just going to JAFO, just be a frickin' observer Tuesday night. Tomorrow's session could be potentially interesting. See if we have an inside day to the sessions that we saw on Friday. So speaking of, let's just take a quick look. I wanted to start just on some 8 hours really quickly with the visible range POC, which is going back to basically the beginning of the year. So I have this set to go back to essentially the beginning of the year. The profile will change with the visible range POC. It's this indicator right here that's on. It's called VPVR. If you look right here on TradingView, you're going to go under volume profile and you're going to select visible range right there. So it'll be the visible range. And the bonds haven't really been telling us a whole lot. I just wanted to point out this, significant overhead resistance here at 139. So can rates continue to rise, hence bringing bonds down? This is what I'm actually going to be watching is the 10-year as much as anything else this particular week, especially what happens with the 10-year and gold on election night as the results come in. Will be interesting to see what those markets do relative to the stock market. I think the stock indices are all going to be very correlated. They're going to go in the same direction, I believe. I'm wrong a lot. So 136.26 down here, as you can see, is probably next level of support. Of course, this move that happened back at the beginning of COVID, I don't think will ever be really repeated again, barring something that just sends us into dire recession and gets rates close to zero again. But anyhow, just keep this number in mind: 139, just above 139. Clear resistance up there, and all of the volume, as you can see, is up there, and there's some serious overhead supply. Let's just go through the rest of these really quickly. This is again on an 8 hour, okay? It'll look a little different, of course, on different time frames. 3252s is coming in as the POC pretty clearly. You can just see from the histogram here, it's coming all the way out to here relative to this high volume node at 3275. So should be some decent support here at 3250s, just around where we're trading essentially right now, okay? As you can see, it was resistance before, became a support level now. Everyone's watching the same thing, and we are below these key moving averages, so anything is possible. Could certainly see 2 ATR. 2 ATR right now would be about 120, 130 points to the downside, so you'd look for around 3100 even, somewhere in here, as your next potential level of support, and that actually has some significance looking back into the June timeframe where we sort of chopped around there. So we're all going to be watching the same thing. Can responsive buyers essentially hold Friday's lows into the close, because into the election on Tuesday, because we didn't see 3,200 on Friday. I think many of us were looking for 3,200 on the Nasdaq. Looking a little weaker, although as you can see, S&P on an 8-hour is well below the T-line. Here on the Nasdaq, we're actually holding the T-line. But this is what's the most interesting, at least to me, is again, we're just looking at this entire year. You're talking about going all the way back down to resistance here, and originally resistance until we really broke out and just ran for the whole rest of the summer into the fall here. But this is showing 9,000 again. Okay, so that is absolutely in the cards. And 2,000 points in the Nasdaq these days is essentially nothing anymore, right? 2,000 points is about 7 or 8 ATR, 6 ATR, not even that. Let's just say 3. It's about 6.5 ATR. Why are people always texting me when I'm doing these videos? I don't get any texts for like. Anyhow. So 90.50 is the level I'd be looking for there. Before that, though, clear around 10,007 to 10,650, where we spent a little bit of time back in September before challenging the all-time highs again, but did put in a lower high, which a lot of people are saying is pretty significant there. All right, so that's the level on the Nasdaq. Russell, which is the one I'm most interested in trying to get long, but I'm not really interested until we get down to this POC of around 1470 to 1450, and I'll look at probably rather than swing trade the Russell, and I'll call this out, of course, in the room and put any options trades in the Discord channel. But I'm looking to sell puts in IWM. I think it has the best risk reward. Yes, we did not go back and get back up to these highs, but I kind of like the way the Russell's been trading relative to. It has a lot less froth to blow off than something like the Nasdaq, certainly. You can see it's sitting right there on the POC on an 8-hour at 15.35. So I'd be looking for 1435 to 1450, basically 1430s all the way up to 1475 as an area that I'll focus probably on the IWM. The Dow to the Jones. Below its T-line, notice all the overhead supply up here, okay? This is a total 1 year flag pattern, right? So it's a golf flag pattern. So you can kind of play this whole range in here, but really all bets are off if we get below 25,000. And 25,000, of course, is only at this point about 2 ATR from where we're at right now. Doesn't look good. So for right now, it's a market where you want to be selling any kind of rips and know that you have all kinds of overhead supply up there at that 28,610s, as you can see down there. And then finally, let's just look at gold, because gold's, even as I'm recording this video, it's starting to move ever so slightly. Still has to hold this 1850. So 1850 is going to be the line in the sand. If it doesn't hold 1850, it gets a little ugly, but at that point, I think it's so bad it's good, at least if you're overall a gold bull like myself. But I'm going to start to have to see price verify my bullish bias on this, because there's nothing bullish looking about this chart anymore. 1952 is your visible range POC up there, but this whole level down here from 1900 to 1952 is now clearly some overhead supply. So there have not been buyers in this gold market, and there's been plenty of opportunities for them to do so. All that being said, we know that gold likes to, seemingly out of nowhere, do things like this and things like this, okay? The challenge with looking for a pop like that is we really haven't had a significant fall or a really oversold condition. It's really just been churning around in here. And again, we are sitting right here at this key level of 1876, where we bounced from back in August. I think we also want to watch the dollar now. The dollar is starting to turn its way up. It's found some support down here at 92.60s. And if it can manage to get back up a bit above its T-line here on the 8-hour and get sustained trades above 94.75, that is not great overall in the short term for the stock market. Higher dollar, more pressure to exports. That's some of that macro fundamental stuff that should seem to make sense, but we're in a world and an environment living in this horror movie that we're living in where a lot of things don't seem to make sense anymore. But we do want to watch this dollar, see if it continues to firm up, and I think the S&P at least will pause for a little while if the dollar starts to get stronger. All right, I think we can leave it there for now. That'll be it for tonight. Again, it'll all be about the election. Right now, the markets are down slightly, nothing too significant. I had absolutely 0 sense what this session would be like for the first 3 or 4 hours tonight. I thought everything from up, I'm going to talk in S&P. I thought everything from S&P up 60 to down 60. So right now we're just down 25, so not nearly as dramatic as I thought. I didn't think it would be this close to unchanged. But again, there was a pretty decent pop for all of the indices right at the close. Let me just show you what that looked like on the Dow in case you weren't watching it, because it gives you this, there's a trade that I just did on this week a couple times. Let me come over here. No, right here. We'll come to a 30-minute before we drop for tonight. Oh, we have to watch it. Where was it? Here. Okay, so it was basically here. Well, bam. So it doesn't look like much on this time frame if I widen it out a little bit. So that's the low we put in. We're trading a little lower than that now. We were lower than that. 26,175, and they came up here and basically closed it right up here at 26,741s. 26,741s. I think, do I have the right day there? Yeah. Because Halloween. Yeah. Okay, there you go. Yeah, closed up there. All right, we'll leave it there for now. Look forward to seeing you this week. Those of you that are still receiving this, there should be some of you that are still receiving this as Futures on Fire annual members that haven't yet extended your membership via TDG Total Access. I encourage you to do that as soon as you can. We'd love you to stick around. Again, we're going to be offering analysis like this, as well as the trading room, the custom indicators for TradingView, which I haven't really been talking about all that much recently, and then every course we're offering, the private Discord channel, yada yada. The mega membership, the great bundle, TDG Total Access bundle. All right, everybody, have a super rest of your evening. Hope everyone had a nice weekend. We'll see you tomorrow live in the trade room. Thanks.